All right, I am live with the one, the only Julie Munn. Is it Munn?
It's Moon, but that's okay.
Moon.
You can say Munn.
You threw me off because I was getting emails with another name from Julie, and I'm like, oh no. But actually, Julie, you have the distinction of being the very first female that I've been on LinkedIn Live with, at least in my LinkedIn Live. So.
Okay, and this is my very first LinkedIn Live.
Okay, well, awesome. And I tried to get Stacy too, and she's like, I want Julie to have the honor. Either that or the kids just kept interfering, and we never got around to it, which we will. So coming soon.
Yeah.
So Julie Moon, who I met, I guess 3.5 years ago or so, at a dueling piano bar at Dana Point, just outside of the Ritz-Carlton. It's a lot of fun. So there was an old conference, Dealmakers, if you recall, and it was just kind of like a fintech meetup, but a much smaller arena. So you got to see everyone there and get to know them, and it was absolute pleasure to meet you and get to know you. But Julie, now that I've butchered all of the introduction that I could do, including your last name, is there anything you would like to say about yourself or introduce yourself?
Well, yeah, so I am Julie Moon. I am senior research analyst with Finovate. So I've been with Finovate for about 15 years now, which is a long time. So I've seen a lot of changes happen in fintech. If you're not familiar with Finovate, it's a global conference series. We do about 3 events a year. Our next one is coming up in San Diego, May 5 through 7. We also do one in London, which we just wrapped up in February. And we have a fall event in New York that takes place in September. So I don't work on the conference side of things. I get the benefit of going to the conferences and meeting all the people at the conferences, but I do the content side. So I write the blog, help host webinars, write white papers, do a lot of reading. So it's my job to just kind of be kept up on what's going on in this. I spend a lot of my day reading, and then just keeping the events team informed of who's doing what's cool, what's not, who's cool, who's not, so that we know exactly who and what to get on stage when the time comes.
I am looking forward to see you in San Diego. They asked me a few weeks ago to speak on a panel there, so I'm excited.
What panel?
Oh, you would ask me that. Give me 1 second. I'll find it. But no, it is it's a wonderful conference. I love it. I have a good friend who is the very first person to ever present at a Finovate, and it was Sean Ward. I actually saw him last week, and I'm sure he hates when I introduce him as that. But the internet went down, and so if you're not familiar with Finovate, you have 7 minutes to do a live demo of your product, and you have, I think, 2 minutes to talk and then 5 minutes of demo, whatever the breakdown is. Well, Sean got up there and the internet went down, and so he was just like, now what you would see on the screen is, and also that they came up, he had 2 minutes to get through it all at the very end, but he did have a successful exit for his company down the road, which is how I got to meet him, because it was with Jack Henry. And so we've stayed in touch, stayed friends since then. But another fun fact about Finovate, you can go back and review like all the demos that have happened there. So it's really cool to see, like, go back and see where tech was, see where tech is, like see where it's going. And I don't know, I like Finovate. Like, we have some large conferences, like the big Vegas conferences. There's a lot of noise. You see a lot of people, but there's so many people. Finovate is still big, but you actually get to interact with a lot more people on a much closer level. And that's like, so you're seeing real products in action, and so I think it's great. So.
Well, thanks. Yeah, well, we have since fixed all Wi-Fi issues. We now have like a dedicated Wi-Fi person that travels with us. So don't be scared if you demo. Your Wi-Fi will not go down. We fixed that.
No, I mean, we're going way back.
way back.
So
Yeah, 2007 was that first, and that was in a basement in Midtown Manhattan. It was a lot of trial and error, and yeah, 2007, and it is fun. I agree. It's fun to go back. You watch those demo videos, and you're like, wow, that interface looks really interesting.
so yeah, I mean, I guess that's going back almost 2 decades, and it is a much more polished show these days for sure.
Oh, yeah.
To answer your question, I will be speaking on May 6th in the morning. The executive briefing from embedded finance to platform banking, how banks capture this huge opportunity and defend against ecosystem threats.
Okay, cool. That's a good topic for you. That's good.
It's a big topic. We'll see.
Yeah. Good. Well, maybe I'll catch that one. I hope. I never know.
Oh yeah, I'm excited about it. And that reminds me, I need to send them my bio and the headshot. I'm behind on that. Oh, so Julie, really quiet year as a researcher in this space. Like, have you taken knitting? Like, what is keeping you?
Yeah, no, it's not been too quiet. I mean, I like to think at a high level of fintech. I mean, since we see all the companies applying to demo, we also have the awards too. So we see all the companies and innovations applying for the awards too, and then just hear about them all. And since I spend probably like at least 50% of my day just reading what's going on, I feel like I have a pretty good pulse of a high level of trends. And there is one word to sum it up, and I think you're gonna like it. So I have 5 trends that I kind of like sussed out. We don't have to talk about all of them, but just like mid-ish 2026, the one word is infrastructure.
Okay.
The one word is infrastructure. Yeah. So there are a handful of ones. One is the rebundling of fintech.
Okay.
The second one, increase of new bank charters, which has been crazy last month and this month. It's weird. It's a thing. It's a crazy spike. Stable coins, obviously, and there are some nuances to that too, but not just stable coins because that's an obvious one, but bridges between fiat and stable coins, and then the different approaches that larger players are taking. There's agentic payments, which obviously agentic commerce or agentic itself is, it's taken over most fintech conversations across all subsectors in fintech, but agentic payments, agentic commerce is one that is growing rapidly. And I feel like agentic payments, like where we're at right now in 2026, is exactly where we were in like 2013 with mobile wallets. Do you remember like the mobile wallet wars of 2015? 2013, 2015, I feel like we're in a similar spot. With that. So it's new. Nobody really knows what's going on. Regulation there. Consumer interest, not really there either, but the players, like people are launching, they're going for it. So there's infrastructure being built up around it, whether consumers want it or not. And then the last one is consumer fintechs becoming infrastructure, which that kind of plays into some of the other ones that we've seen as well. So I can start diving in, or do you have any other high-level questions?
So I think we can go through them, and I'll probably bounce around just because that's what I do.
That's good.
So agentic payments, I think that's the easy one. Like for me, and I try not to get on my soapbox. Stacey and I may or may not have been having a conversation recently. And I said, Bass is dead. She's like, well, how can you say that? That's been like everything you've talked about. And I was like, well, it's not dead, right? But I do like to overstate things sometimes. I think the next iteration, some takeaways from FinTech Meetup, there are way more banks there looking for fintechs than I heard fintechs trying to find a sponsor bank, which I found very interesting. That shift in the supply and demand. But it's also like, if you're not in the game already, you're going to be more prepared to enter it. But the next iteration, like we've gone from, we have our brick and mortar branches to we have a fintech that's distributing the money movement, money storage, like money lending, whatever that is. to now, like that next iteration. So if you want to call it BAS 2.0 or come up with a completely new one, because some people think BAS is a 4-letter word, it's like agentic payments. So in each step, you've seen that human interaction like get further and further removed from that face-to-face, like your old handwritten GL that we had back in the days. Now, like I think, I'd be curious on your take on what you're seeing, but like I think that we'll see agentic the more digital it becomes, and then I think the digital is going to swing back where it becomes the need for authentically human, like to have that face-to-face interaction. But it's like I think that's where when I look out, I see BAS 1 where we are, BAS 2 is agentic, BAS 3 is actually much more human focused, which will be interesting how that evolves. But what is your take on agentic payments now that I've been just on my soapbox?
Yeah, no, well, that's interesting. Well, and I want to go back to you really quick. So are you talking about this SaaScopolis? How do you even say that? SaaScopolis that we've been reading about for the past couple of months? Is that what you're referring to there?
You know, I don't know that it's
Okay.
the death of SaaS as much as how are people going to transact their financial services. Like, you know, if I had to order a car in my Uber app and then go to my bank and send a P2P, or it wouldn't be a PP in this example, but like if I had to jump to another app and do it, I'd be like, I'll just take a cab, right? Like I'll just keep that old rails and infrastructure. But Uber enabled that like there. So where they are, well now, like, so just to be the annoying parent, I created my AI agent. My 10-year-old has been enamored with it, and so I let her start talking to it. I'm like, why don't you come up with a business idea? And so on Sunday she started like going back and forth, and then I came back that night. I'm like, hey, she's not at school tomorrow, push her. And so on Monday she did some more iterations, and then last night we had the first prototype of a website.
Wow.
And like all I did was I bought the domain, I copied files, and she did the rest. And like, yeah, she's a smart kid if I'm talking as a parent, but if I'm looking at like what are these agents doing and how can they do that, this 10-year-old with zero coding experience came up with a business plan and a website and launched it. Now, will it, like, where it goes from there, I don't know, but we have agents that can do more and more. And so if I want to be lazy, like I can just shoot a Telegram message to my agent and be like, hey, go find these options, and if it's less than this, book it.
Yeah.
And that's like, I'm out of the loop. So that agent's going to go out, and is it like the OpenAI and Walmart? We saw the death of the checkout there, but that's because they were trying to fit an agent into a human world. As both sides have agents, then the humans get more removed and they're a step back. So that's like a really long answer to a very simple question. But
yeah. No, I like it. Well, and I do think the if this, then that, having an agent to do that on so many different levels, like that's going to be huge across fintech. Yeah. But I would also argue like the infrastructure isn't quite there, but it's being built. Like it's right. And it's hard to know, especially as, you know, for any people, OpenClaw isn't safe, but people are using it anyway. It's like we need regulation, we need standardization here. It's not here yet. And that's going to be huge when it comes to payments specifically. Like it's one thing launching, you know, a fun little new company. Well, I shouldn't say that. I don't want to undermine your daughter's new company. Sorry.
Julie, don't crush your dreams so quick.
Launching her new startup, which sounds amazing. Or like having it book your dinner reservation. But another thing, like having it transact on your behalf, because we're going to need, well, first of all, like merchants are going to need to make their products discoverable by these bots, right? Like that's going to change. It's not just consumers using SEO to find it. Payments are going to need to be integrated into it with the agent. So they're going to need a protocol for that communication. And then the identity piece, I think, is huge. And there are companies like, I know TrulyU launched a KYA, Know Your Agent solution last year. And there were a couple other identity verification companies that launched KYA tools. But there are like 3 facets that need to be taken care of. Not only know your agent, but you have to know the customer that's behind the agent, and then you have to know the relationship between the agent and the customer. So there are now those three like bridges there. So yeah, I think there's a lot of complication. We're definitely not here yet. I don't know if consumer demand is there, except for maybe you and your daughter. You guys are one step up. Kind of like mobile wallets in 2013. It's like if you're in it, then you're like, yes. I remember sitting there in 2013, and be like, I can't wait till I could pay with my phone. And people are trying to use, Bluetooth Low Energy to do it, and it just was a disaster. And I think that's where we're at right now with agentic payments specifically. I mean, we are having, companies like MasterCard, they're developing infrastructure. Google, they're building the A2A protocol for essentially like that communication.
Right.
Yeah. And OpenAI, Perplexity, all building things. So yeah, it's early days, but that shift, I mean, it's really bringing conversations up about authorization, identity, and trust. Unfortunately, I think we do have a lot of time to suss that out, but companies are moving way faster than consumers at this point. So it's a little bit of a cluster, I think.
I mean, I think there are two camps, and I was talking with someone last week at the FinTech meetup, and they're like, "Oh, so you're all in on AI?" I'm like, "Look, you either get on the bandwagon, or you're gonna be left behind." And then, that is my stance. I just see the advancement, and I was blown away 2 years ago when I saw it, and now we would laugh at where it was 2 years ago. And
oh, yeah.
every few weeks there's a new iteration, new capabilities, and it's amazing what you can do. I think then I'll be scrolling through my doom scroll on LinkedIn, and it'll be like AI is a crock, oh, it's all overinflated, and it's not. There's so much noise, right? I think people in general, they're using AI or really just using it as a glorified Google, where you're just searching, but they're not seeing the actual use cases where it can go and think deeper, go and I like to use different models and then pit them against each other, and you see that quality kind of rise to the top when you're pitting them against each other. But AI, I don't know. I think it's changing so fast. I don't know how much time we have. I tend to move faster, and I know not everyone is like that. So I do think the mobile wallets is a great correlation, to draw those comparisons. And I had a really salient point, but forgot where I was going with this rant. So.
We'll just tie it all back to mobile wallets. Yeah.
Yeah. I mean, it's mobile wallets. Julie, she pulled that one out, so we'll give her credit. But let's see what. Oh, yeah. I mean, nah, I'm going to end that. I'm not going to let my brain jump to a different tangent. So what else? So you said infrastructure. What are you? Is the key word. What is your biggest one of the five that you brought up? What do you think? Where do you see or just pick one? Pick one. I picked the last one.
You picked the last one. Well, let's talk about bank charters before we talk about infrastructure, because it ties into it. Because it's about owning infrastructure, right? So right. I did some research, and there are 9, and I could be missing some. Please excuse me if I do. But there are 9 fintechs in the past year or less than a year, since June 2025, that have either applied for a bank charter or have been granted a bank charter in the US. And that's both in the DeFi space and in the TradFi space too. So June 2025, Circle applied. In December, PayPal applied. Finally. Poor PayPal. And then in January, there were 3. So 2 of them international, Dutch-based Bunk, which that was a pretty big deal, Brazil-based Nubank, and Bunk applied, Nubank received their approval, Checkout.com received their approval in January. In March, there were also 3. Zero Hash in the DeFi space applied for a charter, UK-based Revolut applied for a charter, and this one almost doesn't count, but Upstart submitted a plan to apply for charter also in March. And then yesterday, Coinbase received conditional approval for charter in the DeFi space. So why does that matter? I mean, I think it's showing that they don't want to work in the partnership model anymore, right? Like they don't want to work with sponsor banks. They want to be the bank. So they want to own the infrastructure.
And it's not all just fintechs like or DeFi. Erebor, like they came out of nowhere and they're all the way through, and they have some big names, big funding. Like they have a super smart team and they're going to do some really cool stuff. Like they are like seem to have a little more of a crypto slant to DeFi, but and then there's, I think the shining example of what you're talking about was Mercury, right? Like huge business, like, you know, like how about we get our own charter and then we don't need the sponsor banking. And so it's fascinating. We went from a period where there are no charters, where they just seem to be flying out the door, and like, oh, you want a charter? Sure. So
I know. Yeah. So I think like SVB had a lot to do with that, and just third-party risk management has been a huge topic of like, how do you control your third parties, and becoming that instead of relying on third parties.
Right.
That seems to be easier if you control the infrastructure. Then you also control more of the customer relationship too. But then also, I think the other half of it is like, why now? Maybe because of the current administration and risk or regulatory ease. You know, people are taking advantage of that. Are there any, like, why do you think why now? Because I've been like, it just seems the past 2 months.
It does seem like the administration has a lot to do with it. We'll call it lack of regulatory oversight, I'm not going to say there's no regulatory oversight, but things seem to be a bit looser.
Yeah.
And like or easier to get the approval. I don't want to offend any examiner or regulator that's watching this, but like what's missed is having a charter is not easy, and sponsor banks, they may be a pain in your ass asking for all these things. You're going to take ownership of that. You're going to be answering to an examiner, not a banker, and you might have 2 years before you really have to worry about that. Don't set up your business model like long term for the next 2 years, and remember that examiners have a 5-year look back. So if that pendulum swings, and it historically has, it goes back and forth. You know, those examiners are going to be there, and they're going to be making sure that you're checking all those boxes. So I think it's an opportunity. I think people underestimate how much work goes into keeping a charter and being compliant. You know, consent orders are, we hear about consent orders because they're published. There's a whole nother level that like are close or like partially way there, that those aren't public and banks can't talk about them, like, and examiners don't talk about them. That's between those two. And so, you know, I think it's easy to underestimate the complexity of banking. But then if you have the opportunity, why not give it a shot? So I think fintechs are being overly eager. Banks are underestimating the threat to them, and where it lands is going to be, some will be good at it, some will back out of it. But we'll have more fintechs in the banking space competing directly without a sponsor bank as a result of it, would be my what I'm. But yeah, do you have I feel like I'm talking way too much when I'm interviewing a guest.
No, it's good. I usually interview people, so that's why you feel that way. I've been tossing it back to you. What do you think? You just don't notice it. So that's my fault that I'm interviewing you. No, I did want to get your take on that though, because I mean that was my take too. Is the regulatory ease. So it's good to have, you know, confirmation of that, and then also lowering that risk and like owning the infrastructure. There's value there. So that brings me to the next point: consumer fintech owning infrastructure. So again, they're becoming these consumer-facing infrastructure providers or consumer-facing. Used to just own the UI. Now they want to become the infrastructure that's powering all those experiences. So they want to become those rails that others build on, right? So distribution has become more competitive, but like we were saying before, infrastructure, it offers scalability, stickiness, and then new revenue streams.
Right.
So all those new charter banks, I think, they're taking advantage of all this. And what's enabling this, another piece that maybe goes into it, like why now? Well, new technologies like the blockchain, stablecoins, tokenized deposits, all of these are facilitating the ability to do all this. So the best example I think of this is Stripe, right? It launched as a payments company for online businesses, and now it's like full financial infrastructure layer. And the earliest examples, maybe not as strong, are SoFi and PayPal, which SoFi, it already got its bank charter. PayPal's on the way there. It wants to become that infrastructure. And then just yesterday, Robinhood, or maybe it was Monday, I don't know. It's always been a consumer trading app. And now it's moving into the infrastructure layer, becoming, it was tapped by the US Department of Treasury to build an app for their Trump accounts.
Right.
So owning all of that behind, I think, is big. So yeah, we're just seeing more and more. So I think this indicates, obviously, the market is really crowded. The consumer-facing market is crowded, right? 2020, digital revolution, everybody started launching consumer-facing apps, all of those neobanks, challenger banks that launched. And now banks are saying, and fintechs like, oh, well, what if I just own the back end of this? So the value is moving to the rail instead of the consumer interface.
Right.
Yeah. And I think it creates deeper moats too, like that competitive advantage. It's harder to get at what they were doing.
I think we've seen it's a shift in economics in the sponsor banks. They used to, like, if you want a sponsor bank, there weren't that many, and you took whatever term sheet you could get. And with the early 20s, the consent orders that came out, the 60 to 90 million that was lost between a middleware and a bank, like, people were skeptical of that. And now that there's a better rule book in how to do it, more banks have gotten into the space. And I heard someone talking about it was a race to the bottom between two banks for a fintech, that more competition. But like what you're talking about with the infrastructure is you're seeing it shift where, like, the bank historically, and I'm going to overgeneralize, but if I'm going to get into sponsor banking and I go get a sub ledger, it's my rails, everything is my tech. I'm not going to touch international money movement, so you go find a wire provider and you bolt it into your fintech. But for your ACH, like domestic wires, whatever that might be, like, that's all within my sponsor bank is that. And so now the fintechs are like, well, I can use these rails. I don't need yours, but I might need you for whatever that is. Like, I'm going to still use you for a subset, but it's a smaller piece. So if you're doing less, you earn less. And who owns the rails owns the economics. And it's just a power shift. And there's so many unknowns as to who are the long-term players. How are they going to, so I don't know. It's a fascinating time to be in financial services because it's changing so fast. And I think that's the challenge for especially community bankers is, I don't know how many times I've been told, oh, I've made a lot of money doing the same thing for a long time. Like, good for you, but change is coming. So
yeah, well, I mean, it's like PayPal. They sat on what they had for so long. They had everything was ready for them, and they just didn't take advantage for it. It used to be the coolest tech. I used to love PayPal, and then they just stopped. It's like, what are you guys doing? Like, everything was building around them, and they just refused. I don't know. I mean, they just didn't get in on the game. But I think it is interesting, so looking at banking infrastructure providers used to be almost like a bad thing when we saw the unbundling of fintech, right? When in 2015, we saw, robo-advisors, insurtech companies, everything that you used to get at your traditional, regular 1990s era financial institution was being pulled out. And then it's like, oh no, banks are at risk of just becoming infrastructure providers and not owning customer interface. It's like, well, now if they don't have that title of the infrastructure providers, because these fintechs that pulled all their services around are also building their own infrastructure and also rebundling, like Robinhood in Robinhood's case, rebundling all banking tools to become its own bank, and all these other charter or non-bank fintechs that have now either applied for or gained charters. Yeah, so I think now it's like banks aren't just at risk of just becoming infrastructure providers. They're at risk of losing customer deposits in general, like in whole, which is that's like what they need. That's what they're built on.
Right. I mean, the balance, I think, is the banks will own compliance unless the fintechs get through a charter. So they do still have some skin in the game if they can handle that. Like that's if I'm a banker, like I would definitely lean into the compliance side because that's what they've done or should have been doing for their entire existence. So they should have a core competency there. I would like look at what the best rails, the best infrastructure is. There's so many different players. I think I could, even the cores. Jack Henry bought the Victor last fall. FIS had Attilio, which is like Bond was their previous subledger, and so I know they've had some headwinds there. But then there's the legacy subledgers, there's new subledgers, like there are fintechs that are adding the rails that are like you could. I don't know. There's so many options out there. I would lean into how do I make sure compliance, number one, and then number two, how do I stay open to delivering this and still maintain that compliance? But I don't know.
I think the other piece of it too that banks have that fintechs don't, and may possibly never have, or it'll take them a really long time to build, is consumer trust, especially older generations. Like my dad is not going to move his money from Charles Schwab. Like it's not going to happen. So he's not going to go over to Robinhood for fun. It's like, and not only with older generations, I think if banks, if financial institutions do a really good job, they can capture that with younger generations too, because there is that trust there. And like you said, a lot of that's built on compliance and because of compliance. So if they can maintain that relationship, then it's not all lost for banks.
Yeah, you're spot on. The trust. I was almost cringing. I thought you were going to say customer service, but I like to give community banks and credit unions a hard time because everyone's specialty is customer service, like you and all of your competitors. But they are trusted institutions and they've been around forever, and so I think you're spot on. Like there's some built-in trust, but if I have an app on my phone, it may be really cool. That doesn't mean I trust it. But if I'm driving down the street and I see a bank, I'm like, oh, they're probably trustworthy. Like, but they are not. I don't know. That's the examiner's job to make sure of. But that is like my first impression is going to be they're trustworthy, and I think that's a big thing. So I know we're coming up on time. I want to be cognizant of that. Anything else that you find topical? I mean, I'm going to expect you to get back on here with me at some point in the near future as well.
I know. Well, fortunately, things keep changing, so there'll be a lot more to talk about in the future. So that's all I have for now. I don't want to. I mean, I have so much more, but
right. Oh, I mean, we can go all day
for a long time if we did. But check out the blog. Come to Finovate. We'll see that. We'll share insights.
Connect on LinkedIn.
Yes, LinkedIn.
Okay. All right. Well, Julie, thank you so much. Can't wait to see you here I can't believe it's just a few weeks away, but Finovate Spring, it's going to be great. And thank you so much for taking time to talk with us today.
Yeah, thank you, Steve.